Your Excellencies, distinguished guests, ladies and gentlemen, Assalamu alaikum, good morning, and good afternoon to everyone. On behalf of the Islamic Financial Services Board and Astana International Financial Center, I have the pleasure of welcoming you virtually to the joint IFSB AIFC seminar, COVID-19 Investor Protection and Transparency in Islamic Capital Market. The seminar is being held in conjunction with Astana Finance Days 2021. Without further delay, I would like to invite Dr. Bello Lawal Mata, Secretary General of the Islamic Financial Services Board, to deliver his opening remarks. Please welcome Dr. Bello.
Thank you, Mr. Alibek. Bismillahir Rahmanir Rahim. Wassalatu wassalamu ala Sayyidina Muhammadin wa alihi wa sahbihi wasallim. Your Excellency, the CEO of Astana Finance Center, Mr. Mukhtar, distinguished delegates, speakers, ladies and gentlemen, Assalamu alaikum wa rahmatullahi wa barakatuh, and a very good morning and afternoon to all of you. It is indeed my pleasure to welcome you all to today's joint IFSB AIFC seminar titled Islamic Capital Markets, COVID-19 Investor Protection and Transparency in Islamic Capital Market. We have converged here today in yet another online seminar reflecting the radical transformation in our communication approach in the era of new normal. That is how COVID-19 pandemic has been reshaping every aspect of our socio-economic and financial activities nowadays. The Islamic financial services industry across the globe has been experiencing its fair share of the pain inflicted by the pandemic. Being an integral part of the system, the global Islamic capital market have witnessed periods of high volatility followed by recovery phases. However, the structural transformation through the Islamic capital market, through which the Islamic capital market sector has been going through, has its own implication for the long-term sustainability and stability of the ICM sector. In this context, today's seminar is intended to discuss the importance and implications of investor protection and transparency in developing a sustainable and stable ICM sector that will contribute to the overall financial system stability. Indeed, we have the pleasure of inviting an elite panel of Islamic finance experts to discuss and share ideas on these very important issues that may help enhance our understanding and awareness relating to the specificities of Islamic capital market sector, particularly during the pandemic. Ladies and gentlemen, over the years, the ICM sector has been the fastest growing segment in the Islamic financial services industry, securing a widespread popularity in non-Muslim majority jurisdictions as well. To be precise, the ICM sector recorded a growth of around 26.9% year-on-year, while expanding its share in the total Islamic financial services industry assets from 26.5% in 2019 to 30.7% in 2020. As the significance and penetration of the Islamic capital market sector is growing, the challenge is to develop a robust legal and regulatory framework in place in order to maintain the investors' confidence for the sustainability and stability of the market. Let me shed some more light on two of the most important driving forces behind the dynamics of investors' confidence. One is the investor protection, and the other is the transparency in the market, both of which will surely be discussed later in more detail by our erudite speakers today. As we know, investors feel confident when they have sufficient fund trust, a sufficient trust with regard to their funds in the market mechanism that their investments are safe and protected from misleading, manipulative, or fraudulent practices, including insider trading, misuse of client assets, and misleading claims of Sharia compliance. Trust is particularly crucial for the functioning of the ICM sector, and as it is a foundation that is based on the principles of Sharia, and their compliance is very, very essential. Therefore, in addition to the conventional practices, investors' protection in the ICM sector should be understood in relation to matters of Sharia compliance and means of redress in the case of Sharia non-compliance to build a trust and confidence among the investors. Supervisors and regulatory authorities like the Astana Financial Services Authority need to play an important role in developing a clear governance and oversight framework in order to boost the investor confidence. And this role goes beyond doing what is legally required to incorporate what is right and Sharia compliant. The other building block of investors' confidence is ensuring transparency in the market, which may be defined as the degree to which information about the trading, both for free trade and post-trade information, is made publicly available on the real-time basis. Clear and meaningful disclosures of all relevant and material information should be made public so that investors can make informed decisions. Such disclosures help the investors in raising their level of financial literacy, thereby empowering them and enable them a shield of protections in the process and enable them to make an informed investment decisions. Hence, it is crucial that regulatory and supervisory authorities ensure the highest level of transparency in disclosures, especially in the ICM sector, for maintaining positive investments and investor sentiments. Distinguished participants and delegates, we have already observed the many challenges presented by the ongoing COVID-19 pandemic for the global financial sector. At the same time, the pandemic has introduced opportunities for the financial sector to expedite the digital transformation of financial products and services, which we call the fourth industrial revolution now. As a result of this, we are witnessing rapid technological advancement, especially in the ICM space, by introduction of more inclusive, innovative, and efficient capital market structures. Also, some government authorities have streamlined the ICM in their national agenda to deepen the Islamic capital as well as the Islamic financial market through the innovation or innovative products related to ICM by embracing technology. This fast adaptation of digitalization has also raised concern in terms of investor protection with regard to transparency as well as cybersecurity risk, as well as, of course, the Sharia perspective of such digital transformation has now been considered still remaining a debatable across a number of jurisdictions. Regulators should also be aware of these challenges while formulating relevant oversight policies in order to boost and stabilize the sector. As you know, the IFSB is strongly committed to facilitating the development of ICM through publication of research, development of international standard guidelines and technical notes and principles, and organizing awareness program and joint events like this one that we are witnessing today for the benefit of Islamic finance regulators, supervisors, marketplace, and other stakeholders. In this regard, the IFSB has been issuing relevant standards to provide regulatory and supervisory authorities with a benchmark in formulating oversight policies and principles for the ICM sector. The IFSB has issued a guiding principles for investor protection in Islamic capital market that we call AIFC2021 that recognize the crucial role that investor protection plays in the development and integrity of the ICM sector. The guiding principles set out a minimum requirements to be applied in the ICM for the protection of investors and the promotion of financial stability. The provisions in the standard also address emerging financial technologies in the ICM sector, including crypto asset platforms, peer-to-peer financing, equity crowdfunding, and online retail trading and investment platforms. The IFSB has also issued AIFC2021, which is another standard that is a core principle for Islamic finance regulation, specifically focusing on Islamic capital market segments. These core principles set out 38 high-level core principles and their associated assessment methodology, which set out a broad general framework for the regulation of Islamic capital market. This standard is expected to be used by jurisdictions as a benchmark for assessing the quality of their regulatory and supervisory systems. The IFSB has also issued AIFSB19, which is a guiding principles on disclosure requirements for Islamic capital market products, particularly Sukuk and Islamic collective investment schemes. It sets out it categorizes and sets out a set of general principles that are common to disclosure of both Sukuk and ICIS instruments, as well as a guideline on specific principles applicable to each sector. While this standards set up the minimum requirements for a transparent and investor-friendly ICM sector, regulatory and supervisory authorities are expected to aspire for achieving the highest level of standards for an inclusive, efficient, transparent, and Sharia-compliant ICM sector. The effort of the IFSB is continuing in this regard, and that's why we are now currently coming up with a new standard on deepening the Islamic capital market sector. And definitely the investor protection components will not be left out in this new guiding document that we are working on. In the current challenging landscape of the ICM, new challenges and opportunities will continue to emerge, which will be discussed and analyzed by Sharia scholars, researchers, and practitioners in the days to come, inshallah. I believe the sessions in today's program will be able to add valuable contribution to this end, and it will definitely support the initiatives by AIFC in strengthening and making the Islamic capital market sector more resilient, stable, and sustainable in the Nur-Sultan. The IFSB is delighted and commends the efforts of AIFC in promoting Islamic finance in the region. We believe with the effort of the AIFC, it positions itself to be the hub for the Islamic finance in the CIS region. The leadership and the management of the AIFC has demonstrated their commitment by collaborating with international organizations, international stakeholders, and experts in promoting Islamic financial services industry, not only in the CIS region, but globally. On that note, I conclude by wishing you a productive discussion and look forward to a constructive outcome of these engagements, and we look forward to a future more engagement with the AIFC. Thank you for listening to me. Wassalamu alaikum wa rahmatullahi ta'ala wa barakatuh.
Thank you very much, Dr. Bella, for your insightful remarks. Your Excellencies, distinguished guests, ladies and gentlemen, allow me now to invite Mr. Mukhtar Bubiev, Chief Executive Officer at Astana Financial Services Authority, to deliver his welcoming remarks. Please welcome with me Mr. Mukhtar Bubiev.
Thank you, Alibek. Your Excellency, Dr. Bello, distinguished speakers, dear ladies and gentlemen, on behalf of Astana Financial Services Authority, it is my great pleasure to welcome everybody at this joint IFSB and the AIFC seminar series. Development of Islamic finance in the region is one of the key objectives of the AIFC. Today, the AIFC has a fully fledged regulatory framework in Islamic finance, which covers all sectors, including banking, takaful, and capital markets. All Islamic financial services are regulated in accordance with the international standards issued by the IFSB and the IOFI. Today's seminar comes very timely. The pandemic has exposed many vulnerabilities and significantly affected financial consumers, especially in managing their financial commitments caused by the loss of employment and reduced income. Most regulators implemented financial consumers protection measures in response to the risks posed by the COVID-19 outbreak. Increased digitalization of services and reduced access to physical locations also triggered a significant increase in fraudulent activity, for example, by using fake information to tempt consumers to transfer money, or with theft of personal identification information. Now, considering these developments, we welcome the new IFSB standards that have been mentioned by Dr. Bella, the AFSB24 on investment protection in Islamic capital markets, the AFSB21. We think these new standards are comprehensive and forward-looking. In my view, the pandemic offers the regulators an opportunity to redesign consumer protection approaches, and digitalization can become part of the solution instead of being part of the problem. This is especially important for issues which are frequently overlooked, In addition to the ones that Dr. Bello has mentioned, investors' trust and the transparency, I want to add financial education and competition in the financial sector. So in this regard, our cooperation and partnership with the IFSB plays an important role. AFSA has been an active member of IFSB since 2017, and the AIFC has hosted a number of joint events and workshops in Islamic banking, capital markets, and TACAFO. We're keen to further continue our cooperation and developing Islamic finance in the region. Ladies and gentlemen, with this, I would like to conclude my short remarks and wish everyone productive discussions and interesting seminars. Thank you very much.
Thank you, Mr. Mubey, for the insightful remarks. We will now witness the first session titled Strengthening Investor Protection in the Islamic Capital Markets, which it will be delivered by Ms. Amani Ahmed, Islamic Financial Service Board. Amani Ahmed is a member of the IFSB Secretariat and Senior Capital Market Specialist responsible for standards development and several other IFSB projects. Please welcome Ms. Amani Ahmed.
Thank you very much, and good afternoon to all the speakers and participants today. I'm just trying to share my slides. I'm not able to share the slides on the screen at the moment. If the host could enable screen sharing. Thank you. Okay, so now if you're able to see the screen, I'll dive right into the presentation. I'll be focusing on investor protection in Islamic capital markets for this session. So before we move on to the issues around investor protection, just to look at the size and growth of the global Islamic capital markets currently. As at the end of 2020, the Islamic capital market segment constituted 30.7% of the total global Islamic financial services industry. It's the second largest segment out of the three main segments of the Islamic financial services industry, and it is by far the fastest growing segment. If you look at the global Sukuk market alone from 2004 to 2020, we can see there has been very rapid growth in the Sukuk market. The compound annual growth rate of annual Sukuk issuances from 2004 to 2020 was almost 22%. Over the same period of time, Sukuk outstanding grew by around 26%. So we've seen double-digit growth in the Sukuk market. Looking at Sukuk issuances by type of issuer, the Sukuk market has historically been dominated by sovereign issuers. In 2020, 53% of Sukuk issuances were by sovereign issuers or government-related entities. About 37% were corporate issuers. Corporate issuances have increased over the last couple of years, and 10% of issuances were by multilateral organizations such as IILM for liquidity management and by the Islamic Development Bank. Looking at Sukuk issuances by market, 70% of issuances were local currency or domestic issuances, whereas 30% were by foreign currency or international issuances. When we look at the subscription rates for Sukuk issuances, we saw that foreign currency or international issuances were largely oversubscribed and by a very diverse group of investors globally. And so there's significant amount of demand for foreign currency or international Sukuk issuances, even in 2020 when we were dealing with the pandemic. Looking at the Islamic funds industry, we have also seen growth in the size of Islamic assets under management as well as in the number of Islamic funds overall. From 2008 to 2020, there's been significant growth. As at the end of 2020, the size of Islamic assets under management was USD 142.4 billion. This was domiciled across 15 jurisdictions. Historically, the trend has been that most of the Islamic assets under management are domiciled or concentrated in 3 core jurisdictions. But we have seen over the last few years that the share of Islamic assets under management across other jurisdictions have gradually increased, and we expect this trend to continue. So moving on to the next part of the presentation, investor protection. As mentioned during the opening remarks as well, investor protection is a very important component of securities market regulation. And with the growth in Islamic capital markets, it is important to address and implement the specificities of Islamic capital markets into regulations for investor protection. Looking at a comprehensive framework for investor protection, there are a number of key elements, including things like product governance, disclosure and transparency, conduct of business, safeguarding of clients' assets, having in place adequate mechanisms for complaints handling and dispute resolution, investor education, and so on. Many of these elements are common across both conventional and Islamic capital markets. But there are some specific issues within each of these elements that need to be considered or addressed for Islamic capital markets that are different from the normal regulations for conventional capital markets. One area that is specific to Islamic capital markets is Sharia compliance. That is ensuring that any claim made about Sharia compliance is actually true and it is not misleading to investors. So going into each of these elements in detail, I'll focus on the specific issues for the Islamic capital market. Looking firstly at the general principles for investor protection, this is related to ensuring that market intermediaries that are operating in the capital market act honestly, fairly, and professionally, and in the best interest of clients. And this is usually done through the establishment of a code of ethics or a code of conduct that govern the practices of firms. For the Islamic capital market, the main consideration here is ensuring that such a code of ethics or code of conduct for market intermediaries that operate within the Islamic capital market ensure that these are aligned with the values or principles prescribed by the Sharia. These general principles are particularly important in addressing issues or areas where explicit rules or regulations may not be able to fully address some of the things that affect the interest of investors. So moving on to some of the specific issues, such as Sharia compliance, it is important that there are appropriate policies, resources, and systems in place for Sharia governance. If a firm offers products or services that make either an implicit or an explicit claim of Sharia compliance. So some of the Sharia governance mechanisms that may be implemented include the presence of a Sharia board or a Sharia advisory firm, that is the firm, the intermediary, or an issuer having access to scholars, Sharia scholars that can provide resolutions related to products or services as well as the operations of the firm. In addition to having a Sharia board or a Sharia advisor, it is also important for intermediaries to have an internal Sharia compliance function. This could be an internal compliance officer or a department that is responsible for ensuring that the day-to-day operations of a firm are compliant with the resolutions that were issued by the Sharia board, and there are no instances of Sharia non-compliance. In addition to this, there may be an internal Sharia audit function, which is a periodic review of the activities of the firm and of the internal compliance function, whether this is being carried out appropriately and properly, and whether there have been any instances of Sharia non-compliance, and if so, if they've been recorded and if adequate actions have been taken to address them. Depending on the size of the firm or the range of Islamic capital market activities undertaken by a firm, for larger firms, you might have an external Sharia audit, an independent Sharia audit, in addition to the internal Sharia audit. In addition to these core activities that make up a Sharia governance mechanism, I would also need to consider having in place appropriate processes for product approval by the Sharia board, Sharia screening processes for things like Sharia compliant equities and investments, as well as written policies for remedial actions where any incidents of non-compliance occur. This includes policies for example, liquidating an investment or exiting an investment that has become non-compliant, or purification processes for dealing with non-compliant income, for distribution of income to charitable bodies, to have policies for how purification income is calculated and which charitable bodies that it will be distributed to, and so on. And many firms undertake both Islamic capital market activities as well as conventional capital market activities together. So it's important that those two activities are segregated, and there are different staff and different departments that undertake Islamic capital market activities. The implementation of all of these different processes and mechanisms depend on the application of the proportionality principle, that is, the size of the firm and its Islamic capital market activities, and the types of activities undertaken. So in terms of the detailed requirements for Sharia governance, we have a number of standards, including IFC 6, which is on governance of Islamic collective investment schemes, which addresses Sharia governance for Islamic collective investment schemes. We have IFC 10, which is the main standard for Sharia governance, and IFC 21, the core principle standard, has a core principle CPICM 10, which addresses Sharia governance for Islamic capital markets specifically. So these standards will provide more detail on Sharia governance mechanisms for the Islamic capital market. Moving on to another key element, product governance. There are a number of considerations under product governance. One is client categorization, that is ensuring that the measures or regulations that are in place to protect investors are adapted to the particularities of defined categories of investors, since investors may have different levels of knowledge and experience and expertise, similarly in relation to the Islamic capital markets and Sharia compliant products and services. So in terms of investor categories, everybody will be familiar with the different categories of clients. When you look at professional clients or institutional investors and accredited investors, they may have access to a Sharia board of their own or Sharia advisors, where they'll be able to assess the risks related to Sharia compliant products on their own, whereas retail clients would not be able to do so. So it is important for retail clients to have proper suitability and appropriateness assessments, as well as clear risk warnings in relation to specific risks related to Sharia compliant products, including any risk of non-Sharia. They are understandable for clients who have who may not have an understanding of Islamic finance products or basic information about Islamic finance. So in addition to client categorization, you may also need to have product governance arrangements. This applies to both originators or issuers of products as well as distributors. For originators or issuers, the main considerations are ensuring that during the product design or development process, that it is done with an understanding of what the identified target market is, and it is designed consistent with the needs of the target market. and that in addition to the normal product approval processes, there are Sharia approval processes in place, and that issuers provide information to distributors regarding the specific features and structures of Sharia-compliant products and services, because they may be different from the normal conventional products that are distributed in that jurisdiction. So in terms of distributors, the main considerations are that they should have knowledge and understanding of the specific product characteristics of Sharia-compliant products, that they match these to the right target markets, and there is appropriate review and monitoring to ensure that they are being sold appropriately to the right investors. So all of these requirements are to ensure that mis-selling risk is reduced, and to ensure that Sharia-compliant products are sold to the right types of investors, to the right category of investors, and to the right target market. In addition to the product governance obligations that we just discussed, regulators may also introduce temporary product intervention measures where a significant investor protection concern arises. This may be in consideration of a number of factors, including the degree of complexity of a product, the type of investor to whom it is marketed or sold, if it is being sold to retail investors, the size of the potential problem or detriment, and a number of other considerations. So if, for example, any issue of significant non-Sharia compliance arises after the issuance of a product and has significant investor protection concerns in the jurisdiction, then regulators may introduce product intervention measures by restricting or prohibiting the marketing, distribution, or sale of a product or instrument that at least until any issues that were identified by the regulator are rectified. So moving on to disclosure and transparency, another key important element of investor protection. Discussion on disclosure requirements for Sukuk and Islamic collective investment schemes will be done in more detail in the next two sessions. So during this presentation, I'll just focus on disclosures for Sharia compliant equities and for Islamic capital market intermediaries. So in terms of Sharia compliant equities, the main disclosures are common across conventional and Islamic capital markets, but the main consideration for Sharia compliant equities is disclosures about the qualitative and quantitative screening methodologies that are applied to classify an equity as Sharia compliant. So details of the qualitative and quantitative screening methodologies that are used should be disclosed to investors. In addition to this, there should be disclosures about any changes in Sharia compliant status of equities following a periodic review against the screening criteria. In terms of emerging activities in the Islamic capital market space, such as crypto assets, if they resemble equities such as those that offer ownership interest in an underlying business, and if they make a claim of Sharia compliance, then similar requirements would also apply to them, including screening criteria, disclosure of screening criteria. And an equity should not be classified as Sharia compliant if a screening body does not have adequate information from the issuer to determine its status with confidence. So if such information is not available or ceases to become available at a later date, where periodic review against screening criteria cannot be conducted, then that equity should also be excluded from the list of compliant stocks. Moving on to disclosures may apply. This includes any Sharia governance mechanisms that are in place to ensure Sharia compliance of all activities related to the products, Sharia compliant products offered or the services offered. Details about Sharia compliant financial instruments and products or investments offered, and how Sharia compliance is determined, or any resolutions issued by the Sharia board. any other issues such as how client assets are handled, whether they are being held in Sharia compliant accounts, and so on. If firms use technology-based platforms to provide investment advice, for example, firms that use robo-advice, then there should also be disclosures about mechanisms that are in place to ensure that this is within Sharia parameters, and also disclosures about the degree of accuracy that can be guaranteed in terms of ensuring that it is actually within Sharia parameters. In relation to activities such as peer-to-peer financing or equity crowdfunding, where they are claimed to be Sharia compliant, then again similar requirements would apply, such as disclosures about the Sharia governance mechanisms in place, the basis for a claim of Sharia compliance for the platform itself and the individual investments. This could be resolutions by the Sharia board, as well as disclosures about compliance of the financing mechanism if it is in relation to peer-to-peer financing. These are some of the additional disclosures for intermediaries that are operating in the Islamic capital market. Moving on to another core component of investor protection, conduct of business, there are again a number of elements or components within this that should be considered. One is assessment of suitability and appropriateness, which is to ensure that there are adequate policies and procedures in place to enable a firm to understand the essential facts and characteristics about a client, including their preferences in relation to Sharia compliance. So where suitability assessments are undertaken in relation to investment advice or portfolio management, then firms should consider non-financial elements when gathering information about a client's investment objectives, including their preferences on Sharia compliance and other ethical factors. If suitability assessments are conducted through automated tools by a firm that is offering, for example, robo-advisory services, then they should also ensure that the algorithms that are used to assess suitability actually take into account a client's preferences for Sharia compliance. In terms of appropriateness assessments for non-advised investment services, the firm should also gather information regarding the client's knowledge and experience in relation to Sharia-compliant products and services, whether they understand the structures and specificities of Sharia-compliant products, so that the firm can make an assessment of whether they're recommending a service or product that is appropriate for the client. Another key element under conduct of business is fit and proper criteria, ensuring that staff that is giving investment advice or investment information or undertaking key control functions or suitability assessments have the necessary knowledge and understanding of Islamic finance and Islamic capital market products to be able to provide adequate information to clients, and have the necessary knowledge and competence to also ensure that the relevant regulatory and legal requirements are met. For those staff that are performing key control functions, it is also important they understand the firm's internal policies and procedures that are designed to ensure compliance with Sharia governance requirements. So the detailed requirements for fit and proper criteria for these different categories of staff are actually detailed in AIFC2021. So you can have a more detailed look at these in the AIFC2021 standard. In terms of fit and proper criteria, we also need to consider requirements for senior management and board of directors for intermediaries in the Islamic capital market that make a claim of Sharia compliance. Senior management and board of directors should collectively possess the necessary knowledge and competence to fulfill the obligations. By collectively, what we mean is that at least one member of the senior management or one member of the board of directors should have knowledge and past experience of Islamic finance, as well as have an understanding of specific risk management processes and Sharia governance processes that are required to perform the board's role or the senior management's role. Another element within conduct of business is best execution. That is, when executing orders, intermediaries in Islamic capital market should take all sufficient steps to obtain the best possible result for the client. Usually this means on the conventional side, take into account price, cost, speed, or likelihood of execution and settlement, and so on, depending on the category of the client. For retail clients, the main consideration would be the price and the cost of execution. In addition to this, for the Islamic capital markets where Sharia compliant transactions are being undertaken, where an order execution gives rise to a reasonable implication of related to Sharia compliance, then an additional factor that could be considered is whether there are any available facilities or dedicated Islamic securities exchange platforms that allow Sharia compliant transactions at a specific venue, so that any implications in relation to Sharia non-compliance is avoided where this is possible and the option is available. Also in terms of conduct of business, we also need to look at marketing and promotion, ensuring that all information that is included in marketing communications are fair, clear and not misleading, and that all marketing communications are clearly identifiable as such. So if a claim is made within promotional materials that a product or service is Sharia compliant, then this should be true and not misleading. And if any benefits related to Sharia compliant products or services are mentioned within promotional materials, then similarly the risks associated with it should also be clearly and prominently outlined in such material. In addition, information when being presented in client-facing material, they should be consistent in terms of the language used, and again, language should be easily understandable for clients, including the types of terminology used for Islamic products. In addition to this, for things like P2P financing and crowdfunding, the same types of regulations also apply, including ensuring that any relevant Sharia issues that may be important to investors' decision to invest in it is disclosed prominently in financial promotions or marketing material. Conflicts of interest is again another key element of investor protection. It is important to ensure that there are effective policies and procedures in place to identify any actual or potential conflicts of interest, that they are prevented as far as possible, and if they can't be prevented, that it is managed, as well as being disclosed to clients in terms of the general nature and the sources of conflict of interest, as well as the steps that are being taken to mitigate those risks. This is usually done through a conflict of interest policy of the firm, and in relation to Islamic capital markets, it's important that the specificities of Sharia compliant products or transactions are taken into account in such policies where special instances of conflict of interest occur. For example, where there are additional processes or mechanisms involved, such as Sharia governance mechanisms which are not present in conventional capital market activities, you need to consider whether there are any conflict of interest related to those mechanisms. For example, whether the Sharia board has any related parties, if there are any conflicts of interest there, if there are any conflicts of interest related to the purification process, in terms of the charitable bodies that income is distributed to, whether there's any relationship between the charitable bodies that income is distributed to and the firm. So any additional instances of conflict of interest or potential conflict of interest should be identified and addressed, and steps should be taken to mitigate those risks. In terms of safeguarding of client assets, a lot of the requirements are similar across both conventional Islamic capital markets. The main consideration in relation to client assets is how client funds are being held. Client funds for firms that claim to be Sharia compliant should be held in Sharia-compliant accounts to the extent possible. Where this is not possible and Sharia-compliant accounts are not available in a particular jurisdiction, then investors should be informed of this fact, and funds could be held in non-Sharia-compliant accounts if the client has confirmed in writing their acceptance of holding the funds in a non-Sharia-compliant account, and also provided that any accrued interest from holding the funds in a non-compliant account is distributed to charity through the purification process. So in addition to that, for activities like P2P financing and crowdfunding platforms as well, it is important that the same types of requirements apply in terms of safeguarding of clients' assets, including separation of clients' funds from the platform's own funds and holding of clients' funds in Sharia-compliant accounts wherever this is possible. And if not, then the same requirements being applied, such as purification of any accrued interest if it is held in non-compliant accounts with the client's consent. It is also important that there are adequate mechanisms available to investors for handling of complaints and for dispute resolution. In terms of the Islamic capital market, it is important that staff that are undertaking complaints handling mechanisms have adequate knowledge of the specific features of the Sharia-compliant products or transactions that are being undertaken by the firm, and also of any relevant Sharia resolutions that are issued by the firm's Sharia board prior to issuance or offering of a product or service. In addition to this, they should also have a general understanding of the Sharia issues involved so that they're able to adequately address any investors' complaints that are related to Sharia issues. The complaints handling process should also, if the complaints are related to the Sharia compliance of products or processes, they should interact with the Sharia governance bodies of the firm all the way up to its Sharia board. In relation to dispute resolution mechanisms, it is important that any remedies that are offered or enforcement mechanisms and dispute resolution alternatives that are offered are sufficiently reliable and that they are in line with Sharia rules and principles where the issues are related to Sharia compliance. This is important to inspire investors' confidence in the Islamic capital market. So lastly, investor education. This is a very important component of ensuring investors are protected and they have adequate understanding of the products that they're investing in. So in order to increase awareness of Islamic capital market products and services, it is important that investor education and financial literacy programs ensure that there is adequate programs and information designed to improve investors' basic competencies in relation to investing in the Islamic capital markets and the promotion of the understanding of the types of Sharia compliant investment products and services that are available in the jurisdiction. Usually a one-size-fits-all approach does not work for investor education, since Islamic capital market investors, even in the retail category of investors, may have different levels of experience or financial sophistication or understanding of Islamic capital market products or Islamic finance in general. So it is important that investor education programs are also targeted to the specific needs of specific groups of investors. So with that, that concludes the presentation. Thank you very much for listening, and I'd be happy to take any questions.
Thank you, Ms. Amina Ahmed, very much for your session. Your Excellencies, distinguished guests, ladies and gentlemen, the question and answer session will be the first one. So now we are going to have a break for 5 minutes, and we shall start soon the next session.